buyer here. Do you agree?
I would hold the company, especially after today's appreciation. The company is up about 25% after news about a partnership with Amazon. It's a 5-year partnership. That's great news. And many analysts predict that this is going to be the next AI play. But let's make no mistake, this is no NVIDIA, it is no AppLovin. It does have a bright future in front of it, but we believe much of it has already been baked in, especially after today's 25% pop. For example, now its enterprise value to EBITDA is 105 compared to 13 for the rest of the category. And so the EBITDA has dropped from 30% to 15%, and the revenue growth is negative. It is not a bad company to own, but we wouldn't buy it after today's pop.
All right. Next up, Ava, is Campbell's Soup, but it's not just Campbell's. It's down 6% after a mixed quarter. Falling short of sales estimates, also naming a new CEO is because Mark Klaus is departing to be the president of the Washington Commanders NFL franchise. Take that dynamic. And what's the trade for Campbell's?
It is a sell. We would never own the company. The company has been down by 20% the last 25 years. So investors haven't made money in the long term. And this company does have a dividend yield of 3.3%. So some investors might be interested in the company just for the dividend yield. But in this market, there are much better opportunities when it comes to appreciation. Now, there is concerns about the health. There's a very high concentration of sodium in these soups, and millennials especially, and people that are interested in having a healthy lifestyle are avoiding this kind of condensed soups. And so we don't see the category in general having a bright future. And at this point, we think there's very little upside.
All right. Lastly, then, Chewy. Let's go to pet food. The shares are down 4% after missing on Q3 profits. I saw a drop in active customers. Ava, what do you do with this one?
So this is a hold. It was a great COVID play. We used to own it during COVID. We haven't owned it since then. Its revenue growth has come down from 47% to 3.7%. That's a huge drop. And so its enterprise value from EBITDA now, it is 36 compared to 7 for the rest of the category. So not only is the growth down, but the company is very fully priced. So wouldn't encourage investors to own it right now. And let's realize that millennials especially were into comfort pets back during COVID, but we don't see this pattern coming back. And so overall, it was a great company during COVID. We don't see a bright future going forward, at least in the foreseeable horizon. And in this market, again, there are so many great opportunities that I would encourage investors to look at.